Hello everyone and welcome back to The Pulse, where we take a closer look at what's happening across the real estate markets in Greater Vancouver and the Fraser Valley. I'm Susanna Gonsalves, and back again with me today are both Brittany Reimer and Alan He. Today we're on location at Rhythm in South Surrey's Grandview Heights neighborhood, where leasing is now underway at this newly completed purpose-built rental community developed by Isle of Man Property Group and Polyco Group of companies. Rhythm is bringing a fresh rental offering to one of the fastest growing areas in the region.
Yeah, and it's a very exciting time for a project like this. With studio homes starting from just $1,500 per month, Rhythm is creating a new rental opportunity in a community that's continued to see significant growth over the past several years.
We're also here on Site Presentation Center, where prospective residents can get a firsthand look at what the community has to offer. And what stands out is the focus on creating more than just a place to live.
Yeah, exactly. So from the fully equipped fitness center to the social lounge and the expansive outdoor gathering spaces that we saw today, it's beautiful. Rhythm combines contemporary rental homes with amenities designed to support everyday life and really just bring a sense of community together here.
Yeah, and that's what makes projects like Rhythm so relevant in today's market. Renters are increasingly looking for places that offer convenience, community, lifestyle, and value all in one. Rhythm definitely checks those boxes. But don't take my word for it. Come tour for yourself. Now, switching gears here, let's take a look at May, how it unfolded across the Greater Vancouver and the Fraser Valley markets.
Yeah, let's get into the pre-sale market. What did May actually look like compared to where we expected to land?
Yeah, so May delivered 2 project launches and a total of 174 homes released to the market. Same month absorption came in at roughly 4%. And the headline of the month is that we finally saw a concrete launch, the first of 2026, after 5 straight months of nothing but townhome and wood frame projects. Concrete is surprisingly back on the board.
That's a significant shift. And walk us through that concrete launch. What is it and where did it land?
Yeah, the launch is Milano at Capstan Village in Richmond, bringing 136 units to market. And the important detail here is that it's move-in ready. So buyers are transacting on completed product, not waiting 3 to 5 years for delivery. Now that distinction matters because the absorption window looks different on a move-in ready versus a typical pre-sale launch. The decision cycle is shorter, but the buyer is also working through a different cost calculus, financing today, occupancy today.
Yeah, and their incentive package is definitely telling. Now pricing starts from $549.9, and the developer is offering a $30,000 hotel and restaurant gift card to buyers plus 3% commission to their realtors. They're incentivizing both the buyer and the agent to move this standing inventory as quickly as they possibly can. I think velocity is a little more important here than the top end pricing is.
And speaking of velocity, 4% feels light for May absorption. What happened to our spring market and how does that compare against historical norms?
Yeah, great point, Alan. This is a very light spring, and truthfully, we kind of bypassed the spring market altogether. We really didn't have one at all. There hasn't been anything truly positive and meaningful from an economic standpoint to give confidence to buyers, so we remain in the same pattern we've been seeing kind of all year. Now, the 5-year May average for same month absorption sits at roughly 32% on average over 550 units of sales. We're significantly below both at 4% and only 7 home sales.
Yeah, that's a gap that defines the market right now. Supply still sits elevated, but demand hasn't quite caught up yet, and we're still working through accumulated inventory. Now, on the supply side, it's worth noting completed standing inventory is being discounted heavily to move, so the developers are launching new product, are launching into a market that is really cheaper, ready now, alternatives that's really taking shape with these incentive packages.
Right, and what's the read on June? Does the pipeline pick up?
Yeah, I mean, June is forecasted for 4 projects, 176 total, all wood frame townhome product. 3 are located in the Fraser Valley across Surrey and South Surrey, plus 1 in Greater Vancouver. That's a townhome launch in Coquitlam, specifically on Burke Mountain.
Right, and like May, I'm assuming these forecasted figures don't match up against their historical June levels?
Yeah, you're absolutely correct. That volume needs to be put into context. Now, looking back over the past 5 years, June has historically been the top month for project launches, averaging roughly 13 projects coming to market. Now, 4 forecasted launch puts us at roughly 70% below the historical norm. And on units released, we're running close to 90% below the 5-year June total.
Yeah, same story we've been telling for months. Supply discipline. Developers are not pouring inventory into a market that's still working through completed standing stock. The June forecast is consistent with that posture, even in the month that's historically been the busiest of the year.
Now, what stands out to me for this month in particular is that there is a wood frame launch coming soon. And it's not a combination that we've seen all year to date. So Surrey once was a market characterized by steady flow of new wood frame launches with more than 10 projects coming to market in 2024. That pace has slowed considerably in 2025 with fewer than half as many launches. And now midway through 2026, we're seeing the first new wood frame project launch of the year. Now this project is going to be part of our project feature.
Awesome. Well, let's jump right into it. Britt, walk us through the feature of the month, Britt, and what's the project?
Yeah, so the project is called Hearth. It's a 90-unit wood frame project by Oviedo Properties in Surrey's Newton neighborhood. A quick note on timing, the grand opening was actually held in late May, but we're counting it as a June launch because some of those absorptions would have firmed up this month versus last month. Now we'll have a first 30-day absorption read on the next month's episode as we just kind of wait to see how things panned out there.
Yeah, speaking of timing, this project moved to market unusually quickly, ramping up marketing efforts and collecting registrations in early May before proceeding to a grand opening less than a month later. This type of accelerated sales timeline has become rare in today's pre-sale market.
And where exactly in Newton is Hearth located?
Yeah, so it's located at the intersection of 128th and 64th Avenue in the Newton neighborhood. The site occupies a prominent corner adjacent to Timanimos Park and is within close proximity to schools, parks, and everyday neighborhood amenities. It's actually a really popular area. Now, Newton has been established as a residential submarket with a strong multi-generational buyer base. Families are really drawn to the area for the proximity to the parks, secondary school, Kwantlen University, transit along 64th and 128th Street, and a real range of amenities that are offered in that particular area.
And Britt, what does the unit mix and pricing look like?
Yeah, so Hearth is offering studios to 3 beds. They're starting at $3,099 for their studio, which is 396 square feet. Now the 1 beds come in at $349,900, and those are mid 400s for square footage, up to 500 square feet. Now on the family side, the developer is advertising 2-bedroom homes under $480. That's at $479,900 for 2-bed and 2-bath, which is actually pretty sharp pricing, and 3 beds at 1,100 square feet from $679,900.
Yeah, with those studios and 2-bed price points, they are seeking to capture both first-time buyers and move-up families in the same launch.
And on timing, when does the project complete?
Yeah, so their phase 1 completion is targeted for spring of 2029, and it is worth flagging this release of Hearth's phase 1 community is a multi-phase community with over 400 units on this corner. So Oviedo is signaling a multi-year commitment to the Newton area with future phases, including planned street level retail to just feature the walkability. It is interesting being sort of 3 years out. I think in the pre-sale side is a tough market right now to be selling product that is that far out.
Yeah.
Most of the buyers we're finding anyways on projects are looking for a finished move-in ready. And so there is a pre-sale market that's been, not great, but like at least absorbing with that finished product. But anything pre-sale a couple years out, I think is going to be a bit of a longer road for pre-sales.
Yeah, and that's true across the board. Like every market is feeling the same.
Yeah, that feels like a pretty big bet on Newton in this market.
It is, yeah. And we've been quite active in that area, in the Panorama area for quite some time as well with our Amazon Block project. And, it certainly is an end user there. The investor market is obviously, really non-existent everywhere right now. And so just attracting people to want to be waiting 3 or 4 years right now, I think is going to be, an interesting tactic. And I think they're going to have to be quite strategic on their marketing campaign and pricing to hit that.
Yeah, especially for a move-up buyer, right? It's you often, because moving is not easy, and it's quite a process, and so by the time you finally get ready and you've mentally prepared yourself and aligned things and have listed your home or whatever, it's like you don't want to wait 3 to 5 years. When you make that decision that you want to move, you often want to move in a much smaller timeline because you're likely at a place where you really need the extra space now. You've kind of put it off as long as you could have, and so pre-selling that in this market in particular, I think we've seen that be quite difficult.
Yeah.
Anything notable on amenities and finishes, Suze?
Yeah, the amenity package is geared towards everyday family life. So 2 landscaped central courtyards with an outdoor kitchen and seating areas, covered lounges, a children's playground, an outdoor fitness area, and a fully equipped indoor fitness room. There are also dedicated work from home stations built into the common areas as well.
Yeah, all in, it's a strong offering, and the sales team has reported they've done a handful of deals out the gate here. I think some of them were still in rescission when we checked in, but it'll be interesting to see how it goes. Now, whether the broader market is fully ready to absorb new product at this pace is a real question, and then ultimately the answer comes down to how quickly the existing built-up inventory cleans up here.
Right. Speaking of elevated inventory, shall we dive into resale stats? What were the main sales numbers across both regions?
My favorite part of the segment.
That's right.
Yeah, Greater Vancouver registered about 2,150 sales in May, up about 2% month over month, down 3.5% year over year, and still about 27% below the 10-year seasonal average. Now, the board's framing this month was apartment sales lag, other housing segment steady. Now, detached actually ticked up about 1% year over year. Attached homes were essentially flat, but apartment sales fell about 7% year over year, and that's what's pulled the headline down. Now, as you know, I've been watching that detached number quite closely the last few months, as it has now had a few consecutive months of improvement, which is nice to see, but we did see some added inventory this past month as well, so sales to listing ratios haven't increased yet. Therefore, still work to be done before we see this as a greater indicator of the market improving.
Yeah, and Fraser Valley posted 1,100 sales, basically flat from April, at just a 0.5% month over month, down 5% year over year. Now, by product type, detached up 2% year over year, townhomes flat, apartments took the hardest hit at down 23% year over year. Same divergence as Greater Vancouver. Ground-oriented product is holding, and apartments are really lagging in this segment.
Yeah, and it's worth flagging how this lines up with what we just walked through on the pre-sale side. Apartment is the lagging segment across both resale boards, and it's the same product type that has been the quietest in the pre-sale pipeline all year. Now, detached and townhomes are the segments holding firmer on resale, and that maps directly onto that wood frame and townhome product mix that has dominated new launches all year. The same buyer cohort and users are driving all markets right now, but the pool of buyers is shallow, with many still hesitant to make decisions, still trying to sell their existing home before they commit.
Right. And on the listing side, how does the inventory picture look heading into the summer?
Yeah, Greater Vancouver active listings sit at about 16,917, basically flat year over year, down just 1%, but still about 35% above the 10-year seasonal average. The key shift is that the year over year growth didn't increase. So after climbing for several consecutive months, May is the first month where active listings actually came in below the same month a year ago. Now, on new listings, May was down 7.6% year over year. So seeing that new inventory slow suggests sellers are pulling back from coming to market. That's the supply side stabilization signal we've been watching for, and quite frankly, desperately need.
Yeah, Fraser Valley shows the same pattern, even more clearly. Active listings at 10,000, down 4.6% year over year. New listings down 17.6% year over year, and the steepest pullback that we've seen in a very long time. Now, days to sell are also telling: 35 days for detached, 37 for townhome, 40 for condos. Buyers have time, they have choice, and lots of negotiation room.
And where does the sales to listing ratio land in both regions?
Yeah, Greater Vancouver's sales to listings is at 13.1%. By product type, that's 10.7 for detached, 15.4 for attached, and 14.2 for apartments. We have been in the 13 to 14% range since February, and at these numbers, things are somewhat flat. We're seeing nominal gains and losses month to month. As said earlier, we're just seeing more of the same with no major drops or improvements in the market just yet. We need to continue to see a pullback in new inventory and ideally some kind of positivity in consumer confidence to see that shift up.
Yeah, and Fraser Valley is at 11% of both, also buyer markets territory. Both markets, especially in the Fraser Valley, remains an opportunity-heavy market for end users right now.
Right. And on the pricing side?
Yeah, Greater Vancouver composite HPI was up 0.2% month over month. So like I said, fairly flat, but it is still down 6.2% year over year. A very modest positive monthly gain against a still soft year over year back to those sales. Now the detached benchmark sits at 1.8 million, up slightly from April. The apartment benchmark at 697,000 is down 7.9% year over year. That's the segment doing the heaviest pricing adjustment work.
Fraser Valley composite benchmark dropped 0.7% month over month to 893,300, and that ended a 2-month streak of monthly gains. Year over year pricing is still down 7.3%. Now it's a soft month on prices for the Valley, and affordability continues to improve for the buyers at that level.
With prices softening across both regions, let's switch gears and head into the rental market.
Yeah, Alan, over to you. Walk us through what May actually delivered on the rental side.
For completions landed in May with 416 units come to market overall. Same month lease rate across board came in at 8%, 35 units leased. Two themes stood out this month. First, this is now the second month in a row without a concrete completion. All 4 May completions were wood frame, and the geographic spread was wide, running from Abbotsford all the way through to Vancouver East. The second thing is, with the data, same month absorption ranged from about 5% on the lower end through just over 15% on the upper end. That's a meaningful spread, and the variance is mostly explained by where in the month each project came in online and how mature its pre-leasing effort was at delivery.
Yeah, so what's going on the leasing team floor right now? What is activity like right now for people coming through our doors?
Yeah, great question, Britt. Tours are steady, but the renter pool coming through right now is structural. These people are timing their moves around the school year, job changes, or end of the lease decisions. On the ground, this is a renter's market. There's plenty of choice. Asking rents are stickier than they were 6 months ago, and the incentive layered on top of those asking rents are pulling effective rents below what the listing actually shows. The negotiating leverage sits with the renter right now.
Yeah, is this a typical activity for this time of year when we look at the cyclical leasing timing?
Yeah, pretty much. May's read largely in line with typical seasonal pattern. May tends to be a transitional month where projects come online, but same month absorption stays modest while pre-leasing pipelines are still maturing. The lift usually comes through in June and July alongside summer moves, end of school year decisions, and broader pickup in tour activity.
Yeah, speaking of that, can you tell us about June? Now, the forecast is the biggest number that we've actually seen in a really long time, surprisingly.
Yeah, that's right, Britt. 6 completions and 890 units are expected to complete. That's the highest single month completion forecast we have for all of 2026, over double what May delivered. Now, the form mix shifts as well. 602 of those units were concrete, and the headline within the headline here is Sanok. Building 1 technically delivered in the last few days of May, with the first move-in starting that week. Initially for the Squamish Nation members, with broader leasing opening to the general public through June.
Yes, now that is indeed a lot of rental supply coming on the market at once. Can you tell us a little bit more about Sanok? It seems to be the hot topic right now.
Right, and Sanok's what everyone's talking about. So Building 1 brings 400 units across 2 10-year streams, 67 below market rental units, and 333 market rental units. Starting rents on the market side are about $1,600 for studios, $2,275 for 1 beds, and $3,505 for 2 beds. Worth flagging the milestone, Building 1 is the first completed tower in what is on track to be the largest Indigenous-led residential development in Canada. Tower 2 and Tower 3 are in the final stages of construction and slated for completion later in 2026.
Yeah, and crazy when all 4 phases land. We're looking at roughly 6,100 rental homes, an incredible moment for the Squamish Nation and shift in the city's supply picture that will last a long time for the city.
Yeah, absolutely. And now let's switch gears into the month rental feature.
Yeah, walk us through this month's feature, Alan.
Love to. Maple and 41 is a boutique low-rise wood frame rental project with a total of 77 units at 5688 Maple Street in Kerrisdale from Sightline Properties. Moving ready as of June 1st, pre-leasing actually started in March, and the project is currently advertising that there are approximately 20% leased heading into June completion window.
And what's the unit mix and the price ranges like there?
Yeah, the entire mix runs from 1-bedroom layouts through to 3-bedroom townhomes. City 1-bedroom starting at $2,250 a month for a 412 square foot format with sliding bedroom walls. Standard 1-bed starting at $2,540. 2-bedrooms start from $3,465 and 3-bedroom townhomes start at $5,440 for a 1,054 square foot layout, pet friendly across the board. Now, 14 of these units are below market rental units, leaving 63 units as market rentals.
Yeah, what kind of amenities do they have there?
Yeah, building amenities lean into the rooftop. About 5,000 square feet of outdoor space with a barbecue area, social lounge, and a kids' outdoor play area. Bicycle room, storage lockers, keyless entry, and security cameras. Now, inside the home, stainless steel appliances throughout, luxury vinyl plank flooring, quartz countertops, rain shower heads, in-suite washer and dryer, walk-in closets, individual thermostats, contemporary interior by 8K Design.
Good thing they have thermostats.
Yes.
Thank goodness. That is very important.
And luxury vinyl plank.
Yes, you need that too. Tell us about the location.
Yeah, absolutely. Kerrisdale is a strong location for boutique retail. Point Grey Secondary and Quachina Elementary both close by, plus direct rapid bus to service the UBC. That mix appeals across to renters, young professionals, families, and students.
Yeah, and Kerrisdale itself is a fairly distinctive rental submarket. New purpose-built rental product is rare here. Most of the existing stock is older buildings or investor-owned condos, so a boutique 77-unit building like Maple and 41st stands out on the supply alone. Now, the tenant base tends to be rooted to families and long-term residents drawn by the school catchments, the walkability, and the West 41st retail strip. That is the renter profile that converts a one-year lease into a multi-year tenancy, which is exactly what a building like this is built for. I mean, let's be honest, everyone loves Kerrisdale, so why wouldn't you want to live there?
Agreed. Now let's close out the show with the rental tracker.
Yeah, Alan, let's walk through the rental tracker, looking at purpose-built rental apartments and investor-owned rental condos completed within the past 5 years. Where did May land?
Yes, average rents across all major submarkets track landed at $26.61 in May, essentially flat from April's $26.60. Average price per square foot came in at $3.90, up marginally from $3.85 last month. And honestly, flat is the story this month. After a quarter of softening through Q1, the asking rent average has now held steady for the 3 consecutive months. Asking rents are stickier than they've been in a long time.
Yeah, what about the effective rent picture? What are we hearing on incentives?
Yes, incentives layered on top of asking rents are still material. Effective rents are typically 5 to 10% below the advertised asking rents we're tracking here, depending on the time project and the lease term. So this 2661 number is the asking floor. What tenants are actually paying after free month parking credits and other inducements is meaningfully lower.
Yeah. How did the submarkets shift in this month relative to last?
Biggest change at the top of the leaderboard is North Vancouver took the #1 spot from downtown Vancouver this month. North Van averaged $32.67 with downtown at $3,200. Vancouver West at $3,085 rounds out the top 3. A handful of submarkets posted slight gains this month, but those moves likely reflect listing mix composition more than tenant demand when high rent buildings come to off market or lower price product comes on. The submarket average shifts. Surrey was the softest at the lower end of the leaderboard, sitting at $19.99 with a 3-month change down 8%.
And looking at the broader window, how have rental rates moved over the past 3 and 6 months?
3 months changes across all markets essentially flat at down 0.1%, so essentially nothing. The market has now functionally held steady across most recent quarters. 6 months change comes in at down 3.9%. That still carries the weight of last winter's softening. Over the 6-month window, mostly all submarkets we track are in the red or hover around 0, with one exception. Langley actually recorded a slightly increase of 2.6% on the 6-month read. Every other submarket is showing negative changes over the 6-month window.
Love to hear that, Langley, for the win. Anything to read into the Langley outlier?
Likely a mix of listing composition and Langley's continued position as an affordable end-user submarket. Worth watching whether it sustains or whether it reverses next month. The bigger read across the tracker is that the pace of decline isn't just slowing. At the 3-month level, it has effectively stopped, which is good news. The asking rent floor is settling, and we'll be watching whether June completion wave, particularly the concrete building landing in Vancouver West, shifts the listing mix enough to move the submarket average next time we look at this.
Thanks, An, and that feels like a good place to wrap up June. I will say it feels like flat was sort of the word of this episode. It's like flat, same, no change. Like everything is kind of just
Status quo.
status quo.
Maybe the bottom sounds like. Are we calling the bottom here? Maybe
It could be.
Your
yeah.
lips, God's ears.
I mean, at least we've got the World Cup to look forward to here, and I don't think that's going to be flat.
No,
Right? It's going to be great. The
no.
city's going to be buzzing. There's going to be a lot to talk about there. And the weather's supposed to be really great for the next 10 days. So we're excited about that.
I live downtown. I don't think I'm going to be driving my car very much in the next few months.
And also, we're so sad to say goodbye to you, Suze. After 21 years here, it's going to be hard to see you move on. Of course, it's been such a pleasure with you filming over the last couple of years, to say the least. You've just influenced MLA as a whole so much over the last 20 years. And, your friendship and just how inspiring you've been to so many people around you is something that I think those that are watching will feel as well. And we'll be sad to see you go, but also excited for your next journey. And we're excited to watch you just rock it over the next 10, 20 years in this business.
Yeah, thanks. It's impossible to put 21 years into words. I came in like a kid, and here I am now, an old woman. I've been through so much. I've learned so much. I've met so many incredible people. Friendships, as you talked about. I've loved filming The Pulse. It's hard to believe that when we started this, it was Ryan and I on Zoom from our homes during COVID.
Yeah.
And we've come a long way since then. So I'm going to miss this. I hope that you'll call me back, maybe as a special guest.
Yes, we will.
Every once in a while. Thank you. It'll be an exciting time ahead.
Yeah, well, it's a pleasure. I feel like, there's lots to celebrate here. I feel like I should walk over there to the fridge, get our little bottle of bubbles. I should have had it ready right here.
Yeah.
But we can definitely do a toast after this. And, it's been a great 20 years working shoulder to shoulder with you. So thank you for everything.
Yes, and thank you to everyone for watching. Still make sure you subscribe. Make sure you still tune in next month. We will see you. They will see you next time.
We will see you next month. Looking forward to it.
So afraid to lose, clinging to a past that doesn't let